a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
A recent industry classification change is going to be affecting ETFs a little bit. And to tell us more about that is our ETF Research Director, Nina Mishra. So what this really involves, Nina, so that everybody understands, is the Global Industry Classification Standard, otherwise known as GICS, right?
Yes.
So they made a change. They've added an industry. And the change is going to take effect at the end of September.
Yes. So last year, two major index providers, S&P Dow Jones and MSCI, they announced these changes in some sectors because and these changes were announced because of the change in which we consume content or we watch media. So these changes will be effective end of business on the September 28th.
Okay.
And these are going to impact some very high-flying technology and media stocks. And a new sector, or we can say the old telecom sector, is being revamped and it's being classified as the new communication services sector, and it will be home to many of those hot technology and media stocks.
In addition to telecom?
In addition to old telecom.
Old telecom. Okay.
Stocks. So, in fact, this sector will now be more growth, more like a cyclical sector with a better growth outlook and a much lower dividend yield compared to the old telecom sector, which was like a defensive sector with slow growth outlook and a high dividend yield. So that is why investors who hold technology ETFs, broad sector technology ETFs, or consumer discretionary ETFs, or telecom ETFs, they should note these upcoming changes because maybe the ETFs that they hold will not have some of their favorite stocks. For example, if you want to have, you want to have some exposure to Google, and you bought a technology ETF in anticipation that, okay, I'll have exposure to Google through this ETF, then you should be aware that some of the broad technology ETFs will not hold Google or Facebook going forward.
So will the ETFs that are out there now that investors hold with those names in them, will those ETFs get renamed?
No, they will not get renamed, but their exposure will change. Now, two major providers of sector ETFs have taken different approaches to these upcoming changes.
Okay.
So that is why we are highlighting two top tech ETFs that will be impacted by these changes.
Okay.
State Street, which is a major provider of sector funds, they have launched a new communication sector ETF to get ahead of these changes. But the changes in their technology ETFs, including their the most popular technology ETF, which is called the Technology Sector Spider ETF with the ticker XLK, this will change only in September. On the other hand, the other major provider of sector ETFs, Vanguard, the Vanguard Information Technology Index Fund with the ticker VGT, it is the second most popular technology ETF. This is already undergoing changes. Starting the second quarter, Vanguard funds started tracking transition indexes, custom indexes. So they have been steadily selling those stocks that will go out of technology, and that is why they have been selling Facebook stock also, for example, because for Facebook, Alphabet and Netflix, 3 out of 4 original FANG stocks will now reside in the new communication services sector. So because of this, their earlier decision to, start using transition indexes, that caused some difference in the performance of these two tech ETFs, though originally they were like very, very similar.
And so that's the major impact.
That's the major impact. So let's take a look on these two tech ETFs which will be impacted the most. The first one, as I mentioned, is the one by State Street. It is a technology select sector SPIDER fund. And if you go to the external homepage of this fund through the link on Zacks.com, and you take a look at the holdings, you will see that Facebook currently accounts for more than 6% of assets for this ETF, and Alphabet, or Google's parent Alphabet, it accounts for more than 10% of ETF's weight. Now, these stocks will go out of this ETF in September, towards the end of September, and they will go and reside in the communication services SPIDER fund. And as I mentioned, that the other major provider, Vanguard, is taking a different approach. So that is why if you take a look at the Vanguard Information Technology ETF and go to the external homepage through the link on Zacks.com and take a look at the portfolio, you will see that Facebook and Alphabet do not appear in top 10 holdings now, because they have been steadily selling those stocks in order to prepare for the changes.
Sounds a little more confusing than maybe it really is on the surface.
It is not that confusing, but these are some of the changes which investors should be aware of. And as Google and Facebook go out of technology ETFs, it is obvious that Apple and Microsoft will have larger weights in the technology funds.
And these big names will only appear in one of these ETFs?
They will now appear, those names which will go out of technology, they will now appear in the communication services sector ETF.
Okay. I think I got it.
So as I mentioned, the two providers adopted different approaches, and that has, kind of caused a difference in the performance of these two top tech ETFs, because we know that Facebook stock plunged more than 20% after they reported their second quarter results. So that is why the two tech ETFs, which were very, very similar earlier and will be very similar again in October after all these changes are implemented, they saw a big change in their performance. The Vanguard fund is up almost 17% year to date, whereas the SPIDER technology ETF is up little more than 13% this year, whereas the S&P 500 index is up about 7% year to date.
All right, and then you also had a chart on this new communication services select sector SPIDER ETF.
Yeah, so this is the new sector which is being created, or we can say that this is the old, this is the broadened and revamped version of the old telecom sector, and that is why State Street has already launched a SPIDER ETF to get ahead of these changes. It is with the ticker XLC. And as I mentioned, the old telecom sector was defensive with a high dividend yield. This is more cyclical with a higher growth outlook and a much lower dividend yield. So if you are an income-oriented investor, this is probably not suitable for you now. But if you are a growth-oriented investor looking for growth names, then probably this is an ETF that you cannot ignore. So this launched in July, and it is very popular as of now. It has already attracted more than 423 million in assets so far. Now we can take a look at this ETF, and you can go to the external homepage using the link on Zacks.com, and you can take a look at the holdings for this ETF. And as I mentioned, this is a very FANG heavy ETF.
Okay.
Facebook accounts for 18.5% of assets, and Google accounts for more than 23% of assets, as you can see. And so about half of its assets are invested in FANG stocks. So that is why this is more suitable for growth investors which are looking for more growth in their investment portfolio.
And in somebody's infinite wisdom, this is a better representation for the consumer in how the consumer consumes these.
The communication, how we communicate, or
Right.
how we consume media content now.
Right.
So it is more suitable with Netflix and Facebook and Google. This
'Cause those are the
represents,
more
yeah,
popular.
this is the way how we communicate these days and consume content.
Okay. So those others you mentioned, or even this one, do you own any of them?
I own VGT, the Vanguard Technology Fund, and the ETF investor portfolio that I manage.
Okay, thank you. And don't forget, more ETF information always exists in the ETF section of Zacks.com. Go to the homepage, use the Funds tab in the top toolbar. It will help guide you right to that section. And Nina does an ETF podcast every week. That exists on the podcast page of Zacks.com. With Nina, I'm Terry Ruffalo.